All right. Good morning, everyone. A very warm welcome to our webinar today on Code on Wages. We truly appreciate you taking the time for out of your busy schedule to join us for this session today. The Code on Wages marks a significant shift in India's wage and labor compliance framework. Um, this also brings greater uniformity, transparency, accountability for organization across sectors. Let me introduce myself. I'm Saravanan Shegran. I head the client success team. Been with ADP for 12 years now. In today's session, we will explore the practical implication of code on wages, its impact on payroll structure, statutory compliance requirements, and I think Sandeep, are you able to hear me? Somebody has told that they're not able to hear.
Yes, sir. We are able to hear.
Okay, all right. Sorry for that. So we will explore the practical implication on the code on wages, its impact on payroll structure, compliances, and any key considerations organizations must be prepared for to ensure smooth implementation, right? So this webinar is also designed to provide not just regulatory insights, but also practical perspectives that will help you navigate challenges, avoid compliances risk, and to make informed decisions, especially for your workforce and also for the payroll state strategy moving forward. um, During the session, we encourage you to ask questions. Maybe you are open to ask any questions through chat channels, and our speaker also will try and see as much as possible. We'll answer your questions. If there are any leftover questions, we'll make sure that we answer that separately to you through an email. Once again, thank you so much for joining us today. Before we proceed, I will introduce the speakers and panelists. Subodh, if you can just go to the next one. Yeah, we have Mr. Subodh, the Director of SGC Services. He is also a chartered accountant with 40 years of experience. We have Vivek Prabhu. He is the site leader for Bangalore. He is from SGC Services and he has around 30 years of experience, post-qualification experience. Ramesh Dayalan from ADP. He is the Vice President of Services with over 22 years of experience. Okay, so with that, without further delay, let's get started. So over to you, Subodh. Thank you.
Thank you, Saravanan. Warm welcome to all of you. We just thought, it's a good time, and the government has bowled. I don't know how many of you are familiar with the cricket terminology, but they have bowled a googly. We were going around in a normal batting stance, and suddenly we find the government has given a googly. A googly is a cricket. For those who are not familiar with cricket, googly is a ball which pretends to be going, towards one side and suddenly turns and spins to the other. So the way, the changes which the government has brought on has been a kind of a googly for all the HR professions, which I'm sure everybody will agree here. Briefly speaking, SGC has been providing payroll, services since 1977. Formerly in HR, we have been in the business since 92, and we run, an establishment which out of Noida, where we have chartered accountants and staff members, and we provide. We also partner with ADP on, whatever areas we have in synergy with each other. And we're thankful to ADP for having given us this opportunity to bring this expertise across to you. Roughly what we are looking at is that the Government of India on the 21st of November 25 introduced 4 significant acts. The Code on Wages, the Industrial Relations Code, the Code on Social Security, and the Occupational Safety and Health Working Conditions Code. These replace 29 existing acts and labor laws. The broad category requirement is that they've introduced universal minimum wages, a concept we are still wondering how it will get implemented. Broadening the social security coverage, which means bringing in a lot of people from short-term contracts, gig workers, etc. Standardized working conditions, simplified industrial dispute procedures, and a single registration and return mechanism. As of now, most of them are, good statements of intent. We have to go about and see how these will be implemented, what rules are coming in, because as has been happening is that they have laid out the table, and then on top of that each sandwich is coming as a different layer. So we are looking at how the changes are. Let's see where the status is as of now. So as we said, the objectives were that they want to bring out ease of doing business, simplify the compliance, reduce Inspector Raj, enable modern work formats. On social security, they have said that they want to extend coverage and benefits and right to all, including gig and platform workers. The four codes, as we said, the code on wages replaces the and consolidates the payment of wages, minimum wages, payment of bonus, equal remuneration. Similarly, other acts do that. This is just a broad introduction, to you people. We will not get into details because the sore point is somewhere else. On the labor code, what the government has done is just to bring everybody on page is that they have introduced gender equality for everybody. That means employers cannot discriminate on gender, including transgender identities in recruitment, wages, and employment. Universal coverage for wage payment. This means they have said that there will be timely payment, and there won't be any unauthorized deductions to employees irrespective of wage limit. Earlier, this was only applicable to for people earning 24,000. Then they have implemented mandatory payment of wages within a specific time, 7 days of the next month for monthly wages, and 2 working days for termination and resignations. Now this remains, where we have to fine tune. The 7 days is what companies have mostly implemented, so their challenge is really not there. The challenge would be probably in the 2 working days and how to streamline the entire operations process before it can be finalized to a 2-day thing. There is they've said, now this is more from in terms of defining in where it is headed, and in terms of who will get redressal within the industrial disputes and who will get redressal outside of that. So basically what they've said is that anybody who's drawing wages exceeding 18,000 and is working in a supervisory capacity is not included in the definition of a worker. So a worker now will be a person who's drawing 18,000 rupees and who has no supervisory role in the organization. Then the other changes, their eligibility for bonus has now been brought to every employee who's worked at least 30 days in an accounting year. And all employees are now covered in these codes which they have been identified. The other activity which has been put on the employers is that all workers above 40 will have to be given a free annual health checkup for improving early detection, safety, and occupational well-being. Women's employment is now available for all types of establishments and during night hours, and with the consent and safety measures, etc. The other thing which will have to get active for people on the HR side is an employment letter is a must for all employees, all workers, and this becomes a little more onerous and taxing when you have an unorganized sector, when people are not really aware of all these things happening. So it will be a little more of a task for people who are companies which are enjoying or which are which employ workers on a regular basis. Working hours have now been identified as 8 hours a day or 48 hours a week, and overtime has to be paid at twice the regular rates. Earlier this was 1.5 times, and you had the shops and establishments which actually of each state which would rule how it works. So here this will have to be seen how this gets adopted across by the shops and establishments, and how these various states and the center align to all these activities. The government has also introduced something called the national floor minimum wage based on the living standards. Now, the states cannot set a minimum wage lower than this. Now, this takes a little bit of a challenge because earlier, if you remember, if you would recall, the central government minimum wages were higher than what some of the states were setting. Now, this makes it, we have to wait for how this gets implemented, whether the government is, going to, reduce their minimum floor from their standard central activities, or the states will have to increase. This is something we will have to, see how it gets close to implementation. Now, the thing which is which has been a point of concern for everybody is that the wages has been redefined, and a uniform definition across all the Indian labor codes has been done, so that the wage definition by itself is frozen. Now, here each act earlier had a different definition of wage, and this is where the things were a bit of a implementation challenge at that stage. But now it's a uniform definition of wages across all acts. So when we say wages, it does not mean different things at different acts. It means one very concise thing across all the labor requirements. Now, just to give you an idea of how this would work is we have tried to create a framework for you people, to explain and get it to be little understood. So earlier, if you remember, we were paying wages under various heads, for companies. We had a basic and an HRA and a conveyance or and the balance was going into a special allowance kind of or other allowance kind of a benefit, head. Now, the government has very clearly defined it and what we call it as Part A. Part A includes, as per their definition, a basic pay, a DNS allowance, a retaining allowance, if any, and all other allowances and payments except those explicitly excluded as given below. So this wages is actually Part A. What is going to be defined as Part A will be the wages by itself. Now, what is excluded is what is said in Part B as we have framed it. Now, Part B includes any bonus payable under any law for the timing in force, any value of house accommodation or light or water being provided, or medical attendance or amenity, any contribution paid by the employer to any pension or provident fund, any conveyance allowance or value of traveling concession, any sum paid to a person employed to defray special expenses entailed by him in the nature of his employment, the house rent allowance, the remuneration payable under awards or settlement between parties, any overtime, any commission. Now, the caveat is that the Part B cannot exceed 50% of the total remuneration, which means that in Part A and Part B, we have to balance it in such a way that the Part B cannot exceed 50% of the total remuneration. If it exceeds, it will be added back to the wages definition. Now, this is where something we have to be very clear. So let's again run through this entire concept. I will explain to you again. By Part A is wages, which is clearly defined as what it is. Part B is the exemptions or the other heads which are there, and these Part B cannot exceed 50% of the total remuneration. Now, the thing which is is that it does not say that the Part A has to be 50%. It says Part B cannot be exceeding 50%, which means if you do not frame or choose your heads correctly, then some of these could get added back to Part A on the wages side of it. They have also said what is exempted in terms of what are full exclusions on wages, which is any gratuity payable on termination, any retrenchment compensation, or any performance-based incentives. Here on performance-based incentives, the clarification and the understanding is that these should not be part of your employment contract. So if your employment contract says, with an employee says that you will be paid X amount of money now, and that what you will, and this will be payable to you after 6 months, this will be payable to after 1 year, all those which are clearly defined will get added back to Part A wages. So long as it's only a pure performance-based incentive, which means it is uncertain, it will get into this exemption. Uh, so any employee stock option will be also exempt, and variable part of any component reimbursement paid to the employees should also not be part of the wages. Also, one factor they've included is that any payment or benefit given to an employee exceeding 15% of the total remuneration shall be added to the wages. In case of non-cash, 20% of the remuneration. If there is a non-cash benefit of 20%, 5% will get added back. 15% is there. Just to give you a ballpark example, let's say if you're a company manufacturing cars, and you decide that you want to give your employees a certain benefit in terms of cash benefit, a discount or a below value cost, then effectively what will happen is that, let's say if your vehicle is priced in the market or by default at 20 lakhs, and you're giving this to the employee at 10 lakhs. Now that 10 lakhs value will have to be mapped against the remuneration, and then based on that decided whether it fits into this criteria or not. Anything additional will get added back to the remuneration. What does it mean for HR professionals in terms of an actionable strategy? You have to audit all your components, which are there in your CTC. You'll have to do the exclusion test, which is part B. What gets excluded is part B. Each component you'll have to evaluate specifically within those 11 items mentioned. Is it excluded? If it is excluded, definitely, and it's part of those 11 elements, then yes. If no, then it is automatically included in wages. Let's be very clear about it. So you have to look at your components in totality. Look at whether anything is in part B, is capable of being put into part B. If it is not, then you can have to assume that it goes into part A. And this is the strategy which will have to be followed when you'll have to structure your new heads. Then when you have to optimize within the compliances. As we were discussing in a couple of face-to-face meetings with some of the HR leaders, the HR manager or the compensation managers were earlier, jugglers with two balls. On one side was the take home, and the other side was the CTC. They had to balance these heads. Now suddenly you have juggling with a few more balls, and the other ball is, part A, what gets into part A, what gets into part B. So these are the components which have increased the complexity of the structuring of, the entire wage structure or your compensation structure. And then whatever you're doing, based on whatever you've structured, the other actionable point is that you will have to create a document for creating a rationale. Whatever you believe is to be excluded, you'll have to make sure that there is a business rationale about it. Maybe you'll have to seek legal opinion on the amounts if they're substantial. The critical part is you have to be conservative. Earlier we had the very simple option. Life was easy. You structure a salary, whatever the balancing figure from CTC, you put it under special allowance. Now you'll have to do it in a very different way and handle it in a much different manner. In terms of what are wages and how do we go about it, our approach, what we've said in the beginning, is it has to be a conservative approach. We have been till now as HR professionals been very liberal, so to say. Whenever employees were coming in, we were trying to give them the maximum benefit available. So based on that, each of those activities, we were working on it. Here we'll have to be conservative because the compliance liabilities on the employers are very defined and very, very clear cut. The point to take care is any component which is not clearly falling within the 11 excluded categories of part A, B, and C should be treated as part of wages for all statutory calculations. This will prevent any future shocks which you may have. As you know already, some of the companies which have, especially those companies which have a longer existence in India, and where the employment age of the employees is skewed towards 10 years plus. They have come up with, because of these changes, into a huge liability. And the code leaves no room for ambiguity. If it's not excluded, it is to be included in Part A. Though it says it's simplicity in law, but it requires a little bit of a sophistication in planning and restructuring your the wages. Just to give you an overview, and here we will touch upon various things put together. We will look at two areas where which have similar impact, and we will touch on gratuity and leave encashment. Now, definitely, as per our understanding and interaction with various companies, most of the companies have structured their wages between 30% to 40% or thereabouts. Those very few of them, whom we have met, have structured them to 50% of the of the gross wages. But broadly, companies are between 30% and 40%. So what will happen is, the direct hit which is coming to the companies is going to be in terms of gratuity and leave encashment, where the increase is going to be there for the employees, for the liability which we have to factor in. You would have read that many of the companies who are especially the IT companies, have already taken a hit to a large extent in their December disclosures to the stock exchanges, where they have said that we've taken a huge liability on these elements. For those who are not listed, out of the companies, out of you who are not listed, you have that leverage that you can plan till this thing. But all the other companies have already taken a hit. So the leave encashment and gratuity are two areas where you have a direct hit on the employer P&L. This provisions will have to start getting in, and you'll have to start talking to your actuarials to get your valuation on the gratuity element of it. As I said, this will be more impacting those companies who have employees with longer years of working. So those companies who are comparatively new, 5 years, 10 years of existence, they may not have too much of an impact. But companies which have been in existence for a longer period of time, they will have an impact. The companies which have employees whose tenure within the company is more than, let's say, 10 years or 15 years or 20 years, those companies will have a more wider impact, because the definition of wages has suddenly gone up to 50%. Similarly, on leave encashment, there is a direct hit. You have to assess what your current set of policies are, whether your policies are, what is the level of accumulation they have employed. We know companies who have allowed employees to accumulate leave up to 6 months. Maybe in a few cases they allowed employees to accumulate leaves up to 1 year. Now, in that cases, the liabilities are huge, because probably the employee has been accumulating leave over a period of time, and you thought it will happen and it will be a very employee-friendly exercise, but suddenly you're stranded with a huge amount of a budget. So over a period of time, probably you'll have to look at your leave encashment policies also, and make sure that they are as close to your liability does not increase significantly, with these kind of liberal approaches. So these are two areas, where there is no recourse available to you people. It's a direct hit. The ESI and statutory bonus is something we will discuss together how it works. So to give you a concept, earlier ESI was applicable to everybody who was up to 21,000 gross salary. So the concept on ESI was gross salary, and because of that, because of this new structuring, what happened is that you have to put partly into wages A and B. So a lot of your employees who were getting up to 40,000 rupees, once you structure their salaries, their wage may come to 21 or so, which means that the liability of certain set of employees who were already whose ESI you were paying, they will be out of their contribution will reduce because earlier you were doing a contribution. Let's say if you're doing a contribution for somebody who was getting a 20,000 a month, your contribution to ESI was on the full 20,000. Now, because of the restructuring, the wages become, from 20, they become 10. So obviously the liability for those people, will reduce. However, it will also include certain number of employees who are getting up to 42,000 rupees. If the wages are defined in a different way, some of those employees may get wages of 21, which means 21,000 a month, which means that these employees will have to be covered under ESI. So some change is something, which we will have to factor in and understand, in your calculations, that which employees are coming in, what are not coming in. Also related to this will be another factor which you will have to plan, is that today you may be giving employment or health benefits or health insurance or other coverages to employees across all platforms. Here you'll have to optimize whether you want to cover, if the employees are covered under ESI and likely to be covered under ESI, whether you want to extend them medical benefits separately as a company, or you want to discontinue with them, or figure out a strategy for that. Similarly, on stat bonuses, the same situation will happen, that there will be a reduction in the cost for existing employees who were complied with because of the definition of wages. The wages will get reduced, but there will be an increase in the amount, as there will be more employees who will become eligible for the stat bonus coverage activity. Now, this is something we have to be clear about how these things will work out. So ESI and stat bonus, to summarize, you will have a reduction in the cost of existing employees. However, there will be increase in the cost because of a lot of employees getting added to that pool where you have to do a compliance. On the PF side, the wages will have a similar impact on you people. I'm just running through one more slide, where we have said that in the new what would be a structure looking like. So broadly, if you look at it, your gratuity will be 2.35%. Sorry, on gratuity, let me also clarify one more thing, because this is a point of so the Act defines the gratuity in two separate categories. Those employees who are on fixed term contracts, they are eligible to gratuity after completion of their tenure, which means that if you have a 1-year contract, they will be entitled to gratuity after 1 year. If it's a 2-year contract, they're entitled to gratuity after 2 years. However, if it is an open contract, then the gratuity is payable as it was payable earlier. So today, if you have an employee who you have hired and the employment contract is open, and the employee leaves after 3 years, you are not expected to pay. You're not, you will not have to pay gratuity on those. However, if the employment contract was for 3 years and the employee leaves after 3 years, then there will be a gratuity liability. So this is some subtle difference on gratuity which you have to understand in terms of this activity. So gratuity on termination of employment, we have calculated up to 2.35%, and then the breakup of basic dearness and retaining allowances will be 48.85%, and since Part B exclusions cannot be there, so those will be the HRA, conveyance, overtime, commission, stat bonus as per Act, your value of PF, yes, and NPS. So all this will contribute toward these activities. So this is just to give you a broad allocation of how this will work. Now, what we did is we tried to do a simple analysis in terms of what would be the impact on companies if they're because of this change of structure. So the top two blocks which you see, the first block assumes that you have if your gross wages were 40, 60, 80, etc., and your basic was 30% of your gross wages, what was your value of liability of various things put together. And under the new code, if you seem to see the green section, is what you would if your wages move to 50%, then your cost on the employees who are getting, 40,000. Once it moves to basic, the gross wages becomes 20,000. Your gratuity, your each liability will increase, and the impact on that 40,000 will be about 8.6%. Anything beyond 60,000 the impact will be about 6.6% of your HR cost of the employee. The liability increases a little more because the element of ESI comes in 40,000. Earlier there was no ESI. Now suddenly you have an element of 8,000 to 800 rupees which you have to pay as gratuity. And so similarly, that's the reason why your costs get pushed up. And if you look at the bottom two sections of it, you will see that if your gross wages were 40,000 and your basic was 40% of your gross wages, your compensation structure across various levels would look like this. And once it moves to 50%, which is the right side of the block, your liability increases by 5.3%. If the employee cost was up to 40,000 rupees, and would increase to marginally 3.3% if the impact was for a higher level employee. So this is just to give you a ballpark figure in terms of your costing, because when you have a conversation, you must know what kind of category of employees you are fitting in, how they get into the system. Now the good news is so far as the PF Act has not been repealed. So the old provisions of things do stand, and PF has an impact on this thing. What the government has done, or what it intends to do by keeping the PF Act. So as of now, let me again clarify, because I've seen a few questions. Let me address. All the things are applicable as of 21st of November 2025. There is no gestation period, no extension, no benefit which has been given, though there is some people have been talking about it. But the bad news which is that the ESI, gratuity, and all the other acts are applicable from 21st of November 2025. Applicability of leave encashment is still in limbo, because we are leaving it to states to decide, because some of these were drawing value from your Shops and Establishment Acts and similar guidelines. So that remains a little bit of a uncertainty. However, the complication which is there is that your PF will have to be contributed at 12% of the new basic as per new wage code. Or for new employees, you can decide you want to restrict your wages to 15,000 per, if their contribution is you want to restrict to 15,000 per month. This is something where HRs will have to engage. The compensations will have to be discussed. Employee benefit method will have to be decided in terms of how to optimize. For excluded employees, there is no change. It remains that PF wage is above 15,000, and at the time of joining, a member is if he was not a member of the scheme, he can be excluded based on Form 11. That option does remain. For the current set of employees, the PF contribution may be restricted to 15,000 per month, but this may be contested by the department, and unless this is clarified by subsequent notices. So here on the PF Act, the bigger challenge which we see is, and this is where we are not clear on why did the government not repeal the PF Act and repeal every other act, and why did it keep them running simultaneously, though originally planned it was. So if you look at the circular which has come in from them, there's listed out everything, and in the final circular they said except for PF. Effectively they said except for PF. Now it means that either they could be framing out a new set of guidelines for PF, they could be coming up with new sets of information on that, but there is no clarity as of now. There is no certainty. So we are still waiting for these things to be revealed over a period of time. But touching some of these things, what we have said, this is where it runs through. I had seen one request by somebody. They wanted to look at the wages definition again on part A and part B. Let me just run it past there. Okay. So this is the definition of wages, which is basic, dearness allowance, and retaining allowance, and all other allowances except for those specifically excluded. Again, the exclusions are, when we said 11 exclusions, some of these exclusions are, in Part B, and some of these exclusions are in Part C. Idea is that if you're on their regular heads, roughly these are the heads where they have been specifically excluded from this activity. The wages in kind, as I've explained, the wages in kind is predominantly some benefit which you are giving to, your employee. As I said, you could be a car manufacturer giving your employees a discounted vehicle for purchase. You could be a white goods manufacturer, giving your discounts, employees benefits to, avail some of your own goods. So these are the things, which will be of a larger value. Or if you, let's say, if you are a real estate company and you decide to give a benefit to your employees, on discounted values of, of your house, or apartments. So these are the broad categories where, you could have a larger hit. Smaller ones, they will fall within that 15%. So we need not get into that, if you're, and so this is broadly what we are looking at in terms of the wage code and the implementations. What I will do is I will request Saravanan and Ramesh to take forward the question answer sessions and address whatever questions you have on that side.
Thank you, Subodh. I think we are keeping well on time. We have 20 minutes, which we can use it for our question answers. We have been receiving a lot of questions from our clients, and we'll see as much as possible we'll cover in this session. Otherwise, we'll make sure that, towards the end, we will also let you know that, who can be contacted to have a kind of like discussion and clarify all your questions. Okay, the first question, maybe this question can be, Subodh, you can answer this question. Regarding worker definition, what is the specific inclusion? Do people working in white collar also qualify?
Yeah. So there is, as we said, there is now no further definition. There is not going to be any differentiation on that. The responsibility is very clear. I will take you back to the particular page and the compensation details. Yeah. So any person who's employed in supervisory capacity. Now the critical thing is supervisory capacity, and drawing wages in exceeding of 18,000 or the amount notified by the central government is not included in the definition of workers. Right? So if you meet this criteria, this particular criteria, then you are not. Now, it does not really, in terms of, let me clarify, it does not really help you much in the definition of wages. It is more directed towards how you will get your redressal under various acts. For example, if you want to, if you want to go to the courts or you want to get some benefits related to, let's say you want to, go against the complaint to the employer, against the employer for various activities, then this is basically directed towards how that will be addressed. So it's more on that direction rather than anything else.
Yeah.
But this is really the position, and it's applicable to across white collar, blue collar. I'll give you a small example, which we've touched earlier also. This was part of a judgment, and this may be, interesting for you to note that at one point of time, the airline pilots went to the court and said, we are covered under, workers category on Workmen Compensation Act. And the airlines objected that you're a senior people, you're, employed, and you have higher compensation, etc. So you're technically not workmen. But the courts ruled that even the pilots were workmen. And they had to be covered under Workmen's Compensation, and their cases could be addressed under Workmen's Compensation Act. So these are the kind of things, so this definition earlier was also not existing and it was available, but now it has been very clearly identified of what is covered and not covered.
Yeah, Likewise, Subodh. Thank you. Um, the next question, maybe Ramesh, if you can just take this question. Is the 2-day final payment period after the termination date applicable to all employees? I think the question is related to whether it is applicable for contract employees, blue collar, white collar, all category of employees.
Sure, Saravanan. Yes, the 2 days of full and final is applicable for all employees. It doesn't mean whether it is a contract, fixed term, or full-time employee. For everyone, it's applicable the 2 days rule. In the contract, if you are engaging with a third-party contractor, then the third-party contractor who has provided the resource, they have to ensure that the settlements are being done within 2 days from the date of exit.
Okay. The contractor has to ensure that within 2 days the employees are settled,
Correct.
right?
For their employees, yes, right.
Got it. Is there any cap in HRA component? Can we keep 50% for HRA? Vivek, if you can just answer this.
I mean, we will have to look at it separately from an income tax perspective and the codes. So as far as the codes are concerned, again, there is no specific limit that you should retain it at 40 or 50% first. Second, in the income tax, it specifically mentioned you can have either 40 or 50, but there again, there is no specific limit that you have to retain it at 50. But one opinion that we would like to come up with is that in case you don't have HRA, or if you have removed HRA since people have moved to the new regime, it might make sense for you to reintroduce HRA as part of your comp structure going forward whenever you kind of revisit the payroll components. That's because if you look at it in the second part, which we mentioned, part B, HRA is specifically mentioned as one of the components. So it makes sense to bring it back to your payroll component if in case it has been removed.
All right. Subodh, the question is for you. What happens if one-time bonus paid is more than 50% of the fixed pay, which is defined in Part A?
Yeah. So bonus is the question is this what kind of bonus is it? You'll have to define the bonus. So is this a performance bonus? Is it a mandatory bonus? Is it a let's say a joining bonus?
It could be performance bonus, which is kind of like
if it is a performance bonus and that is dependent and uncertain at the time of your employment, then it gets covered under the performance benefit category, which is Part C. If it is something which is defined and clearly identified that it is your entitlement, then it gets into a definition of wages. So this is something where we have to be very clear about it.
Okay, that clarifies. Vivek, the question is for you. Total remuneration means CTC or flexi salary components, fixed salary.
Yeah, for this we will have to look at that particular table which we had. So you will have to look at all the components in the payroll. So this part. So if you look at it, just for ease, we had actually split it into three. So when we are talking of wages, so we will have to look at all the components, not just one or two. So you can effectively consider that it is your CTC that you will have to look at, including your base pay, your allowances, your reimbursements, your retirals, all of them put together and see where they fit in exactly into the structure which we have mentioned for each Part A, Part B, or Part C. So that is how it will have to be looked at and restructured for compliance with the codes. So you'll have to look at it as a whole, all components.
Okay.
All components.
All right.
I was told Vipin is here.
Yeah. Sorry. Yeah. Ramesh, maybe this question is for you. Are flexible components, special allowance, part of wage as inclusion?
I think I saw a lot of questions about this special allowance and other allowance. See, special allowance and other allowance, you have to break it into a specific header. If you continue to keep it as special allowance or other allowance, it will be considered as wage and it will be included in the Part A definition only. So you have to rename or relook at your special allowance and allocate that to the respective other allowances which are listed under Part B. Else, the special allowance or other allowance, whatever you call today, it will be considered as Part A for the purpose of definition of wages.
Yes.
And I also saw, Saravanan, one more thing many people are asking, what is this definition of retaining allowance?
Yeah, I have that as
Okay.
Yes.
Okay. So just want to clarify to the larger audience that retaining allowance is generally paid in a industry where people work on seasonal workers. Like, say, for example, in tea, sugarcane, and certain industries where the people are being employed only during the season period. In a non-season period, they will be paid a fixed amount of retaining allowance so that when the season starts, these associates employees can again resume back to a full-time job. So during that non-season period, they will be paid a small portion of amount. It's called retaining allowance. So in that industry only, this retaining allowance is being used predominantly just to make sure that there are certain category of employees, set of employees are continuing the employment, even if there is no season for it.
Thank you, Robert. Thanks for clarifying that. So the next one is to Subodh. What about the exit cases after 21st November? Does gratuity and leave encashment need to be paid? I think I know there's something everyone has. This is on top of the mind because this has been implemented on 21st November. So what do we do for all those leavers, right? Where we have not made the payment as per the code on wages.
Yeah. So as for the clarity, if it has been settled by you people after if the employees exited after 21st of after the act got into place, any employee after that act who is exited after that employee is entitled to those benefits as identified. If you do not include them, if you did not include them at that point of time for lack of clarity, then it's better to document it, identify it, and pay to the employee and make sure that you're compliant. If you keep silent on it and the employee takes it up at a later stage, at various stages, it will be a little bit of a problem. I think it's best to make those additional payments and close it out.
Yeah. Okay. So on the same leave encashment, another question.
Yeah, same leave encashment in this the same way.
Yeah.
On the leave encashment, you see, the point which I had made at during the conversation was that while gratuity is something you cannot change at any point of time, but leave encashment over a period of time, companies will have to taper them off, to make sure that they do not become very liberal. Because if an employee is suddenly, has a 6-month leave encashment over a period of time which they've accumulated, then the liability of them, the companies would have increased, especially for senior level employees, by a significant amount. So this is something you'll have to look at your policies, make sure that you optimize it between your, what is reasonable versus, for the employee versus what is reasonable for the company.
Okay. So as per the code on wages, the 30 days leave encashment, right? Is there a mandate that we have to encash it immediately, or can this be carry forward for the next year? 30 days leave.
See, these were earlier rules which were identified, and the minimum levels were given of carryovers were given by the Shops and Establishment Acts of various states. So those still remain the guiding features. However, the companies were taking a little more liberal approach and saying, you could have a liberal carry forward and stuff like that. So that's where, the hit has been. And as far as the law is concerned, if you comply with the minimum, they are okay with it.
Yeah.
If you give them more benefits to the employees on any case, they have no worry on that.
Okay. The next question is on ESI. Has ESI been extended to all locations? Are the systems geared up to handle this change? Maybe Subodh, if you can just answer this.
Yeah. So earlier, if you people had some establishments in areas which were, in ESI, there was a definition of a non-covered area, which means if you had a factory at a remote location, or you had, let's say if you were in a hill area or in a desert area, where ESI services were not available, then you could not be covered because of that. However, this change has made sure that ESI is covered in totality for everybody. So long as you are eligible under ESI, there is no non-coverage area. It has to be covered. That's point number one. Point number two is there were a lot of establishments which were earlier exempt. Like I believe banking was exempt to some level. There were medical establishments. So a lot of establishments were exempt earlier under ESI, but that coverage has been all taken off. It's now everybody is mandatorily covered. And we did make a trial, to register, an employee under, or rather an establishment in a non-covered area, and to test whether the ESI systems were geared up for that. And they have given now a blanket thing which says, you can go to the determining office and get allocated under any of the heads, and then automatically they will do it later. So how they will give the services to the employees who are in the non-covered area, they will come up with clarifications, etc. on that little later. But as of now, everybody is covered under ESI.
Okay, great. Can you just explain about how this overtime is treated? Because there are a lot of questions around overtime also, I could say. So how is this treated for a salaried employee as per the new code on wages?
Yeah. So overtime, I will just come back to that, place where it is. So overtime is 8 hours or 48 per week, which is your normal working hours, 8 hours per day and 48 hours per week. And overtime is to be paid over and above that at twice the rate of the regular, what the wages rate is. This is where, you will have to determine your, systems, identification, how it gets in. The benefit is that most of the establishments in India now, at least the office establishments, are working 5 days a week, right? So you have a little bit of a leverage available to you on that. But the mandate is very, very clear. Anything over and above that will be paid twice at the regular wages. This provisions did exist in shops and establishments earlier, but the liabilities were 1.5 times. Now it's increased to twice.
Okay, that clarifies. The another question is I think this can be a question, where can be answered by Vivek. Does the incentive bonus TA and DA, which is not included in the CTC as per our structure, but paid to employees, should we now show it in CTC as per the new wage code?
No, when we are talking of TADA, I mean, if they are related to, if they are not part of the wages, when we say wages, regular payments, which is part of their salary, supposing it is a reimbursement, when you are talking of TA, he travels outside of his work location, settles it once he comes back, then it will not be part of your wages, and no compliances need to be done on that. And the second one was on, you had asked on incentives. So incentives, if they are performance based, I mean, if it is linked to their performance or the company's performance, and if it is not uniform across all employees, I mean, the rates might be there, but the amounts definitely would vary. So if they are performance linked, performance related, either of the individual or the company, or some other criteria where it can vary from employee to employee, then it need not come back as part of your wages if you don't already have it. So it will not affect your calculation as far as that particular sheet was concerned, part ABC. So it will get into part C itself. So it will not get into that 50% calculations that we need to look at for calculation of wages.
Okay.
You can keep it outside.
Okay, great. Another question is on gratuity, Vivek. Maybe you can answer.
Yes.
Gratuity
Yeah.
applicable for intern contract employees. Now that it has now become a mandate 1 year, right? 1 year of employees
Yes.
they have to pay
Yes.
gratuity. So is it applicable for intern likewise contract employees?
Interns, when we say if they are coming as part of, if they have come in as part of some educational institution or university related, what do we call
Apprentice.
that? 3-month internship, apprentices and things like that, then it will not be applicable. But if you have taken somebody on short-term contracts, say 1 year, 1.5 year, to carry out some additional work and things like that, then gratuity would definitely be applicable if he completes 1 year, at least 1 year in the total term contract of the contract, at least 1 year.
I would like to,
And there again, there is one small rider, which I mean, sorry to interrupt, that in case the fixed term is for 2 years. So supposing he clears 1 year, then definitely you'll need to pay him for 1 year. Now, what happens if he completes more than 1.5 years? So that again is something which is still being argued, because in other cases, what happens is more than 6 months is considered as 1 year after a period of first year. So in case an employee, the fixed term employee completes more than 1.5 years, then you might have to consider gratuity for 2 years and not just 1.5.
Okay. Subodh, you had something to add?
Yeah. So what I was trying to tell you is that, there is another scheme which the government has come up with, is the Apprentice Act. A lot of companies have started using that benefit, because when you are having apprentices, the Apprentice Act does not have an applicability of ESI, PF, and other compliances. So there, if you have any registrations of any employees under in that category as apprentices, then none of these provisions apply as of now. That is the status which is there. Now, coming to one more question which pertained to, there was a recent question which I saw, I think you'll probably be able to, you have better visibility, you can let us know.
Yeah, that's okay. We can move on. Conveyance allowance. This is a question I thought it's useful for everyone. Conveyance allowance. There are some clients who doesn't collect bills. Maybe Ramesh, if you can just clarify. Conveyance allowance, which comes under non-collection of bills and proofs, right? Can this be considered as exclusion?
No, it cannot be excluded. It has to be considered in the Part B. As
Part B.
Subodh mentioned, conveyance allowance will come under Part B only. It will be considered
Yes.
as Part B for the purpose of calculation purpose.
Yeah,
It
and
is not
it's
a Part C
specifically
item.
mentioned there.
Yeah.
Yeah, it's specifically mentioned there.
It is for the purpose of commuting from home to office, office to home. So it is a conveyance allowance. So this will be included in the Part B definition for the purpose of computation.
Okay. Okay. There is a question on shift allowance. There are some employees who work on shifts, right? And they get some allowances also. So for that, will it include in the will it include in the wages, shift allowance? Maybe both?
Yeah, I'm just coming down to, I'll just give you the relevant part of it. So when you have a shift allowance, it is a kind of an overtime allowance.
Yeah.
Right. When we talk about shift allowance, basically it's a compensation we are trying to give under a benefit which the employee is working at a different hour, which means it's a form of a different compensation. So there is something which is not very clear in terms of exclusion, but in case we can put the shift allowance as an overtime allowance or allocate it like that, then it definitely hits it. Otherwise, it gets into the gray area and gets into Part A.
That clarifies. We are well on time. We have so many questions. So we'll see, if we can also support you by providing the answers. Maybe I can share you the contact details. You can, Subodh, if you can just go to the next. Yeah, you have the contact details here, surajkumar.jaiprakash@adp.com, and his mobile number is given here. Please take note of this, and we will also be sending the slides, and as much as possible, we'll see the size of the recording, and if possible, we'll send the recording also. But you can get in touch with Suraj. You can write an email to Suraj if you need a exclusive discussion with Subodh and team, so that if there are any questions also, it can be clarified. Thank you so much, Subodh, and our panelists, rest of the panelists, Ramesh and Vivek, for your time today. And for all our clients, it has been really an engaging session, a lot of questions. Thank you. Thank you so much for all your questions. And we'll see you next time in another webinar. Thank you. Have a good rest of the day.
Thank you, everyone.
Thank you.
Have a good day. Bye-bye.